Okay, so I'm just gonna again assume that I'm recording this video. So what we have here has been a challenging time here in the markets. I've been feeling, well, not feeling, but I've been aiming towards the sell side lately. So my bias lately has been bearish. But due to the present conditions that we've been seeing, this consolidation, it's been a rough start for 2026, right? If you're trading the first month of January, I can understand why sometimes you're getting unclear biases, if you will, because you got some days where it's running on buy stops, so you anticipate the huge displacements down lower, but then you're not getting them lower. Instead, you're seeing them dip down into discount and then only to be expanded up higher. I get it. I get it. So these are the times where you have to be, or well, we as traders just have to just kind of get the move and just aim it while the expansion is still occurring, right? When the candle is still forming, you get an expansion, you get your 20 to 50 handles, and then you call it a day. Now is not the time to really be holding for full pulls or terminus. What I'm seeing right now is a current here dip that we got here in November, and then we had this market structure shift that we like to call it, right? We had the this is what I would probably identify as the lower risk buy, right, in a market maker buy model. So that's why I have this arc here that's shading in orange. So I wanted to see price to continue to expand up higher. From this low to this high, we have a break of low and a break of high here. This is my dealing range from high to low. So I would have anticipated to see price retrace onto OTE and then immediately head for the buy side, right? Because we've been teasing on it for a while now. We've been reacting off that wick, got up to the almost the upper quadrant of it. But today, what we saw was something that's truly um, the opposite of what I was looking for. So, okay, so we're bullish. We're anticipating a retracement down to OTE. So, from this reaction forward, I want to see another a fractal market maker buy model occur here. This is the daily chart. I have my wick here, my daily wick that I was going to be referring to. You'll see it on the lower time frame, colored in black. And then this purple grade here is the weekly charts wick candle, highest wick. Um, so okay, so what do we have here? Well, we see that price was reacting up that daily wick. I thought that what we were seeing here was another market maker buy model that was going to react fractally to that OTE. So we had again that market structure shift, right? Low risk buy, displacement, first stage reaccumulation, expand up higher, and I was going to anticipate that because we had this shaded area here that's called BPR, it's the balanced price range. I thought that we were going to use that as support here around 7 o'clock, 7 a.m. macro. We had this mini expansion, so good. I was thinking that we were going to keep going up for the entire highs using these graded quadrants here as support to continue to see price go up higher. Instead, in hindsight now that the market's closed, I got to see things in a different perspective, right? So we're gonna be looking at this area here where the black grade is on the lower time frame. We're gonna be seeing some interesting things here. We're gonna be zooming in closer and closer, and as you'll be able to see, we have another mini market maker sell model that was reacting off fractally. It could have been reacting off the weekly, daily, premium wick here, but as you can see, it'll be other premium confluences as well. So this is where I'll show you my screenshots, right? So what I have here is the chart that I was showing to you earlier. So that's this price right here. This was happening this morning, right? Remember that displacement? I thought that was going to continue price going upwards. This is that displacement going up. So again, it just reacted off this dealing range high to low, OTE to sell down further. So let me go up to the next slide. See that low that was created that I thought we were gonna get from the balanced price range to continue to go upwards. Instead, what it was doing for is it tapped first that wick on first percent the fair value gap of the day. Sign of strength? No. So what this means is that I took the first percent the fair value gap of the day. So after 12 a.m., we had a 15-minute fair value gap busy here that we reacted from when price was doing that buy side delivery. And then from this high to this low, we had ourselves a market maker, a structure shift. See here. Yeah, we had that structure shift. And then price refused to head down lower, aiming up to these lows. Okay, cool. So how else would we be seeing price to keep going down lower, right? Well, we had another market maker sell model here from this low to this high down to this expansion. So price wicked up here to the wicked up to that old busy, right? Which in a way, now that I think about it, probably could be as an inverse fair value gap. Wicked above it, but didn't exactly close, right? We didn't see a close above the consequent encouragement of this busy. So that is a sign of weakness, okay? Once we created this low, we broke this this formation's swing low. So this is our market structure shift. Right here, I have an arrow that says lower sell plus OTE. So from this high to this low to the displacement, we have an OTE range, and I'll show you another screenshot where we can dive deeper. But this wick reacted off 3/4 premium before I started selling down lower. We also had leftover liquidity. This was Tuesday's London lunch buy side liquidity, that red line that you see here. So it's a tap on leftover liquidity. So we, in a sense, have turtle soup plus that sign of weakness on that old busy, and we have a market structure shift. So we have a beginning point, if you will, of a low risk sell entry, right? With OTE. Moving forward, we also had this thing here where the SMT highs were forming. So that high that reacted off the first presented fair value gap of the day, we had a low to higher high kind of formation. We looked at the US, ES and Dow Jones. We had a high to lower high. While Nasdaq we had a low to higher high. So this is itself as SMT, okay? And then price was reacting at a time that I would be interested in. Um, just so you know that this is something I kind of not discovered, but I've been just trying to backtest on my own, seeing how price reacts between the time of a 25 to 35-minute range. So take any hour, doesn't matter which hour. Just it could be like 1 a.m., 2 a.m., 3 a.m., and just put in 25 minutes after the hour and 35 minutes after the hour. In between that, I referred that to a say mini macro. This is not something that was taught. This is just kind of something that I've been hypothesizing over. But from 820, in this case scenario, 825 to 835, we anticipate another run on liquidity or a rebalance to an imbalance, right? So in this case, we had a little retracement, run to liquidity. We had this little old high here. Price wicked up above it, gathered those buy stops, sold down lower, and then little by little, with high resistance liquidity, started selling down over, and it didn't really, you know how they say, give up the ghost until 9:30. 9:30 stock market open, it just tanked down lower, lower, lower. So it went down to these lows. I would have liked to have seen it break down even lower, but hey, as low as it goes, you're taking profits, right? That's what's very important to do so. So again, it's kind of like what I've been seeing lately. A market maker sell model inside a market maker sell model, right here from this low to this high to this low right here, sell stops, Asian lows from last night would have been taken. And over here in this area, we have another mini market maker sell model from low, high, lower, low. This is the 7 a.m. lows that were formed this morning. Okay, so I just wanted to show you guys this today, and I'll leave it at that. Leave it at this image right here. Study that and see if you can spot any other entries that you would have otherwise taken. All right, that's all I have for today. Thank you for watching.